Shares of Tesla have been beaten up pretty bad over the last month. However, year to date, the share price hasn't really performed very badly at all, up almost 100%. So that's almost doubling in price over the last year. But they were starting the year at a pretty low point. In fact, low enough that even Mr. I don't think it's cheap enough yet here was starting to actually get a little bit interested. So we'll get into what's been troubling them lately, as well as look at what price I might start to consider being interested in the stock again. So, first thing, I more or less just want to get this out of the way and say I don't think Tesla is by any means a dying business or even a bad business, okay? I mean, look at the revenue growth over the last 10 years, okay? They went from barely even registering 10 years ago all the way up to $81.46 billion in revenue as of fiscal year 2022. And I'd wager that 2023, once the year is done, will show an even higher revenue number yet. Now, that revenue growth may slow, but still, they are still a growing company and still very much alive. One of the factors working against Tesla right now is the fact that previously they had built up some pretty impressive gross margins. As you can see on this chart, they were above 25% not that long ago. And now, at this point, they've fallen below 20%. What that would mean is that for an equal amount of revenue and an equal amount of overhead, the amount of profit they would make on each car would fall by roughly 5%. The only way that you could potentially offset this is with greater operational efficiencies. And that's not to say that Tesla is operationally inefficient, but it's easier said than done to offset a 5+% drop in gross margins. Unfortunately, it doesn't really seem like Tesla's been able to offset the drop in gross margins by increasing operational efficiency. Their operating margins peaked out near 20%, and since then have unfortunately languished. They fell below 10%, and now in the most recent quarter, they reported 7.6%. That's Q3 2023, compared to, again, 17.2% for the third quarter of the prior year, which means it's fallen more than in half, which is a substantial drop in operating margins and doesn't necessarily spell good news for the bottom line growth that shareholders were probably hoping for in the near future. Before we get into the analyst estimates, I'm just wondering if I could ask you to go ahead and smash that thumbs up button and like the video. Really helps me boost it in the algo. Analysts tend to wank Tesla pretty hard and stay firmly affixed to Elon Musk's nuts. That being said, I'm pretty surprised to see a low analyst projection of $85, but the high of 380 with the average of 241, that doesn't surprise me so much. I think it'll be interesting when we start to look at our own valuation of it, where we fall in this spectrum. The consensus hold rating definitely makes sense when you factor in Tesla's current share price with the high target, the low target, and the mid target. It is just below that mid range average price rating. So it makes sense that the analysts would kind of rate this as a hold because it's kind of falling within the range, but not to the extreme low side, not to the extreme upside. When it comes to earnings forecasts, it looks like analysts think what's remaining of 2023 is going to be pretty disappointing. It's already been kind of a disappointment so far. They do estimate it will recover pretty well in 2024 and 2025, with things maybe tapering off a little bit from there. However, with this recent issue with the margins, I might be a little bit skeptical of the 2024 and 2025 forecasts as of this moment. The fact is, issues with the Cybertruck and possibly more significantly, the price cuts they've done multiple times this year are weighing heavily on the minds of shareholders and on the profit margins of Tesla. Now, I hear what some of you might be saying out there. Tesla isn't a car company, they're a technology company. You can't apply the same standards to them that you apply to car companies. They justify the ginormous 70 PE valuation. Well, look at these margins. Now, if you were thinking these were Teslas, you're wrong. They were actually Toyotas. These are actually Tesla's margins, and they are actually worse than Toyota's. So, what the heck are you doing paying like 60, 70 times earnings for a company that's supposedly not a car company but makes cars, but actually has worse margins than the biggest car company in the world, which is Toyota? Moreover, when you look at a breakdown of their revenues, it's clear as day that this is still mostly an automotive company. They're basically a car company with a few other divisions, but it's basically almost entirely automotive sales and other services related to their cars, with a little bit of other stuff sprinkled in there, but nothing actually super significant. Before I head into my own valuation of Tesla, I'd like to remind you to subscribe to the channel, hit the notification bell so you don't miss any more of my videos. Now, for my valuation of Tesla. So, here is where I'm at on Tesla. Basically, I'm giving them full credit for 2024's earnings per share based on the analyst projections. I'm applying a 12.5% discount rate because, frankly, if I'm going to take a risk on a company like Tesla, and it is a risk, they have to do a lot right to justify their valuation. Give them credit for their good balance sheet. They do have a good balance sheet. I won't knock them for that. Give them credit for 12% growth over the next 10 years. Okay, that's a really impressive annual growth rate. That takes into account they may have some years where it's higher than that, but also some years where it's lower, or even hey, this year was a step back, right? So there's going to be stumbles along the way, and then after that, after the next decade, maybe dropping it down to something like 6% thereafter, because I think in the long run, EVs will probably grow at a pretty steady pace, and Tesla is the first mover there. Well, you factor all that in, and you get a fair value of roughly $90. I have it watch listed at $90. That was what I said months and months ago as my kind of target price to where I'm really interested in Tesla. They got kind of close. They were at like 108 like 10 months ago or something. So it's not impossible for Tesla to fall in half or more than half and get here. It happens, right? Meta fell more than half at one point in time. PayPal still is like 80% or something off of its all-time highs. Stocks fall sometimes. And if it gets to this level, well, you know what? Then I'm going to be pretty interested in Tesla, okay? Because I think at that point, I'd be able to get a better than market return for the long run, for 10, 15, 20 years, not for like the short run based on the whims of the market and people doing their technical analysis and all that. We're talking just purely based on the merit of that stream of net income that company produces, plus the balance sheet. So it could go better than this, right? Like, my assumptions assume quite a few things go pretty well, but maybe not that they knock it out of the park to the most extreme bull case. I like to be pretty conservative, and of course, I like to use a higher than market, discount rate when I evaluate individual companies because I want a better than market return. Now, if you're okay with just like a pretty average like S&P 500 level return, yeah, you could have paid the 108 $109 that it was earlier this year, and you're probably in that ballpark. Okay, so you can justify it, a certain amount one way or the other, but $90 is where I happened to, decide to arbitrarily draw a line because that's where it made sense for me. Now, people are probably going to rage in the comments that I just don't understand growth, the future, technology, yada yada. I've test driven a Tesla Model S before. It was fun, but the fact that I personally enjoy a product doesn't, in of itself, justify the valuation of the business behind the product. Now, you don't have to listen to me at all. In fact, you shouldn't. You should form your own opinions. But that's just where I sit with Tesla right now. Let me know what you think. Thanks for watching. If you want to catch more of my videos, please make sure you subscribe to the channel and leave your remarks below. We always love to hear your opinions. Join me on Discord if you want to have more conversations in depth. And feel free to tune in to Cashflow Kings every Saturday, 8 p.m. Link in the description.